Good day YouTube, my name is Dan and welcome to another episode of Cryptolite. I was going through the coins that you guys have recommended for reviewing, and one particular coin, Proof of Weak Hands or P3D token, stood out for me in an interesting way. And I wanted to share my thoughts with you about this project to firstly raise our awareness as a community about this coin, and secondly to help provide some information that you might find helpful. So without further ado, let's take a look at Proof of Weak Hands. In crypto world, we have our own terminology. We have a word called HODL, which is spelled HODL. HODL means to hold your crypto coins when the market is going bad. Likewise, we have people who choose to sell their crypto when the market is going down, and the crypto community has a term for them called weak hands. Proof of Weak Hands then is a blockchain project that plays off the concept that people do not HODL but rather frequently trade coins. On their website, they describe themselves as a blockchain-managed smart contract economy in 3 dimensions. What the project really is an exchange where you can trade Ethereum for P3D tokens. The token is not found on any other exchange, and there is an astronomically high transaction fee of 10% either way. So 10% to buy in and 10% to buy out. So that's a whopping 20% for just one transaction of a coin. By comparison, Binance only charges 0.05% for each transaction, so a transaction in and out of 1%. So with a transaction fee 200 times higher than other exchanges, where you can only buy this one currency that isn't available on any other exchanges, why would anyone want to buy this token? The answer is because if you stake your P3D tokens, you get a cut of the 10% fees that others are charged. So the project claims to keep none of the transaction fees but to distribute it to everyone who holds P3D tokens at the time. Meaning, the token value goes up as more people buy it. So the more people buy it, the more 10% transaction values grows into the pool, which is distributed to more people. And so the more people buy it, the more the token value goes up. And assuming that the token gains popularity over time, those who bought in early stand a chance to multiply their initial investment manifold. There is no actual product of the project, i.e. they don't actually offer any service to the business world, etc. It is purely a project that aims to create coin value by attracting more token investors. There is also a referral program called the Masternode, where if you own 5 or more tokens, you get 33% of the dividends every time someone you refer joins the program. So basically, in my opinion, this is an optional pyramid scheme. Now, even though many of their own supporters claim that it is a pyramid scheme, it's just an open pyramid scheme, so it's not hidden, the project itself claims that they are not a pyramid scheme, and this is their explanation. A pyramid scheme is a business model that recruits members via a promise of future payments or services for enrolling others into the scheme rather than supplying investment or sale of products. This is not a pyramid scheme unless you would argue that all cryptocurrency exchanges that sell currencies and have referral programs are. But where it falls apart for me is that the basis of their arguments is that they are the same as other cryptocurrency exchanges. But that's not true. They are not the same as the standard cryptocurrency exchange because they don't do many different currencies exchange. They really only do one currency exchange. So strictly speaking, you could say they are not even an exchange. They are a wallet with an Ether to P3D token exchange feature. So they are a wallet with an exchange feature. This is different from a multi-currency exchange market like KuCoin, for example, where you can trade and invest between multiple different currencies. The value that KuCoin or other crypto exchanges offers them is the service of trading between these currencies. So there is an actual service that is provided to the community. Proof of Weak Hands has no actual service to any other parties except the token holders and itself. So basically they are just a business model that recruits members with the promise of future payments and also offers bonuses for enrolling others into the scheme. So ironically, based on their own definition, they are a pyramid scheme. It is worth pointing out in fairness that this is optional. A token holder can choose to hold his tokens without referring anyone else. Interestingly, Even though they say they are not a pyramid scheme, on their website when they talk about mining the weak hands, they actually use a picture of pyramids. Why would you associate yourself with pyramids if you don't want to be known as a pyramid scheme? They also claim that they are not a Ponzi. For those who are new to the crypto space, there have been some major Ponzi scams in the crypto space over the last few months, particularly BitConnect and the Davar coin. Both BitConnect and Davar coins were lending platforms where if you lend them a certain amount of money, they will collect interest for you, roughly about 1% per day. They also encourage you to reinvest your money to create compound interest and get lots of interest money in return. But the problem was the money they were paying people actually came from the money that the next token investor was investing. So there was no actual money coming from any source. A legit blockchain project has got to have a source of income apart from the token investments. So example, a blockchain platform project must be charging platform transaction fees. So then the token usage is where the token value comes from, and there is a generation of money into the project from outside. So when people do transactions and they pay to use the token, then you're introducing value into the project from external sources. In such a way, the project's value will increase over time. But in this case, there is no use case for the token. You only earn money from the transaction interest of the next investor. And if there is no investor, no one earns money and the whole project falls apart. They say it themselves actually in their FAQ. Read it here. If the transaction volume slows down or stops, i.e. no one is buying, selling or trading, then this project will generate fewer and fewer earnings. Depending on when you got in, had you not broken even by that point, the earnings stopped flowing, you would be at a loss. So this is from their very own website. And maybe it's coincidental, but I find it very interesting how they bold the sentences before and after this critical sentence. So the one sentence that says it's a Ponzi scheme or defines it as a Ponzi scheme is not in bold, but the other sentences before and after it are in bold to take away the attention from this very important sentence. Also now, a Ponzi is set up to try and retain investors' money within the pool of resources. Now, what a number of people who have invested in this project have pointed out is when you first enter the exchange to buy POWH3D tokens, immediately 20%, not 10%, is taken out. This is because they charge both an entry and exit fee at the same time. Now, it must be written somewhere in their website that they do that, but a lot of people are taken surprised by this initially because it's not announced in a very obvious way. But collecting 20% instead of 10% at the very beginning ensures two things. One, it ensures that there is an additional 10% of funds in the pool to help liquidity should people want to cash out. There is also, secondly, a psychological reminder to the token investor that they have to hodl should they want to earn back their 20%, which is a very substantial deposit in any investment. Furthermore, the project also encourages one to reinvest. So whatever you are paid out, they encourage you to reinvest the interest you earn to build what is called compound interest, so that you end up getting interest not just based on your initial investment amount, but also on your interest. Compound interest can be a very powerful tool so that when you add it up over time, it can literally triple if not quadruple your rewards over a year. It also means that you're encouraged to leave more funds in the pool. Again, this is not a compulsory feature, just an optional feature. At this point, I'm not judging whether this is a good or bad feature. I'm just trying to help you to understand the underlying mechanics of the project. But certainly the principle of compound interest was a key attraction of previous scam projects in the crypto world. But the danger is at some point when initial investors who have earned a lot start to pull out of the project, the funds in the pool may not be able to keep up with the promised returns, and that's where the bubble bursts. And even though they claim they are not a Ponzi scheme, when they tell you how to tip the creators of the project, one of the three creators is called Ponzi bot. So again, why, if you don't want to be associated with a Ponzi, why do you call yourself Ponzi bot? The website doesn't have a white paper, by the way. They have a self-hosted wiki page, which is not the Wikipedia wiki that we know. It's basically just a self-hosted FAQ that they call a wiki page. The website also doesn't have a team listed. All partners or investors, or advisors, or roadmap. So these are all massive red flags to me. You guys know how cautious I am as an investor. Just earlier this week, we looked at Oyster, which was a great project that I loved in every way, even their concept. But simply because their CEO had an anonymous profile, I felt personally uncomfortable investing in it. And again, this is because I'm a very cautious investor. So a project like this with no proper white paper, no team members announced in the open, no pictures of their team members, no names, no partners, no investors, no advisors, no roadmaps. It just gives me alarm bells going off in my head. And oh, the reason that they are called P3D, the number 3 is because this is the third version and they have been hacked twice already. The first time and the second time, I think the second time they were hacked over 1000 Ether worth. So understandably now when we come to the third version, people are asking if it's safe. In their FAQ, this is one of the questions and answers. I heard they were hacked. Is this safe? And in their own words, this is what they reply. Any smart contract should go through the following process before live deployment. Competent developers, code audits, testnet. Previously hacked versions of this project did not follow any of these safe protocols and procedures. Now just stop there for a moment. So you're telling me as a project that your previous versions of the project on hindsight did not have competent developers, did not have a testnet, did not have code audits. Isn't that a very irresponsible act by the team? So who's going to refund those losses and where exactly are those losses? The 1000 Ether that was stolen. Are the losses still in the system as a black hole, which is where the current investors' money are going into? So then it's going to be a bubble because there isn't enough money to pay everyone the interest that they promise. Now they have said that the third version is different and it is better. Multiple independent Solidity developers have audited and closely reviewed the contract, so the likelihood of a hack is small but not zero. But again, no names are mentioned. If you go on a website like QuantStem who specializes in auditing smart contracts, usually they would display the name of the auditor on the website. So if they had a name of the auditor or even if they had the name of a company like QuantStem who did the auditing for them, I would feel a lot more comfortable. Now, they have marketed themselves in this third version as having some unique good features such as being a smart contract, smart exchange only, being open source, being a decentralized exchange, using automatic pricing, volume-based earnings, active income staking, etc. They have also been open about the risk of participating, including the first one, of course, being hacks. If an enterprising black hat hacker were to discover a security exploit in the smart contract code or in the Ethereum virtual machine, they could conceivably steal all of the Ethereum in the contract. So even in the third version, it is not unhackable as some people are claiming they are. They can still be hacked and they themselves had said so. Now this is important guys, follow me for a minute. Imagine if the project was like this box, and inside this box I have the best processors in the world. I use smart contracts, I have open processors for everyone to see and inspect, and I have the best untamperable mechanics in the world. No one in this world, not the developer themselves, not the government, no one can mess with the mechanics of the project. Okay, this is an untamperable process. It sounds very good, right? But all of that, okay, all of that means jack. If someone can come along with a drill or hack and basically force or create a backdoor to take all the money in the pool, because all of that positive processes that we mentioned earlier are protecting the processes and the mechanics within the box, but it doesn't actually protect the pool of money in the box. So just be cynical with me for a moment. We're not being cynical for the sake of being cynical, but we are being cautious and trying to consider this project from all angles. If this project was a scam, okay, if it was, just hypothetically speaking, that's a really nice backdoor you have just created for yourself. The investors cannot take you to court because it was in black and white that you potentially can be hacked and you warned them. It's decentralized, it's hard to trace, and you are not liable for any refund like BitConnect because the entire project and risk was laid out in black and white. All the written warning here already states clearly they could conceivably steal all of the Ethereum. This has already happened twice in this project with no team to hold accountability to because we don't know who they are, no faces, no names. So whoa guys, this sounds super risky and you gotta have balls of steel to invest in this, which apparently a lot of people have. This is a graph from a user's post 5 days ago, and as you can already see, the numbers of the investors is going up and up and up, and at this point of 5 days ago there was 15,370 Ether with a rough value of 6.4 million and around 5,000 different addresses deposited into the smart contract. Um, Proof of Weak Hands as a project has also got a lot of YouTube presence, a lot of positive reviews who are claiming that they have earned a lot of money. One very prominent review recently was from Superman, who is a very prominent crypto YouTuber with over 140,000 subscribers. So he did a review 4 days ago and gave them a 3 out of 5 star rating. I think he initially had an affiliate referral link in his description, but later changed it to just a website link. Now, Superman is a very highly regarded crypto YouTuber and he's very experienced and he probably sees something positive about the project that I don't. We are still a very young channel and I'm still learning a lot, so we can definitely make mistakes. So please do check other information sources before making up your own mind about this project. Other couple of names that are not so good are Trevon James and Craig Grant. These are YouTube names that are strongly associated with BitConnect and scam projects. And they are already started shilling this project very hard. For me personally, that's actually one of the biggest red flags. Furthermore, there's speculation on social media that Tevin Drones just took down all of his proof of weak hands videos, which is what he did right before BitConnect collapsed. So that's actually part of the reason why I wanted to do this video today, because after I checked it out, it could potentially be a time-sensitive consideration if you decide to put any weight on it. Now, as mentioned before, there is no other roadmap or other events to look out for. The only other potential thing to look out for worth mentioning, and this was mentioned in their FAQ itself, is about the stagnation. So again, if the transaction volume slows down or stops, this project will generate fewer and fewer earnings depending on when you got in. Had you not broken even by that point, you would be at a loss. No one knows when transaction activity will dry up, but it's unlikely to happen in the short term, unlikely but not impossible. So it does sound like the developers themselves also expect the project volume to dry up at some point. When there is, no one knows. Some people might want to jump in anyway because they want to ride the wave a bit before jumping out. They think they are smarter than the system. A note of caution here is apparently there have been other YouTubers who have announced flagging this project to the SEC because they are also concerned about it. Personally, I think if you don't believe in the tech of the project and its long-term value, then jumping in to hopefully get out of it before it crashes is at best a gamble. That's not investing. And it's okay if people want to do that because it's their money and they can do anything they want. But on this channel, we always encourage knowing the projects well and knowing why you believe this project is a great project in the long term so you can put your money in it, and that's called investing. So will I be promoting this project or recommending it? Of course not. Imagine if after all that I said, by the way guys, I think this is a great project. That would be hilarious. There are many others who do think this is a great project and I honestly respect their opinions. But for me as a cautious investor, it's just impossible to overlook the red flags. As always, we wish you guys the best in whatever investment decisions you make. Always remember we are not professionals and this is not professional advice or financial advice, so please do your own research and make your own decisions. That's all we have for Proof of Weak Hands. Thank you so much for joining us. Let us know in the comments below what you think of this project. We have lots of exciting great reviews coming up next week. And personally, I've been very grateful for the market recently, which has been traveling sideways at a very low price point, because it's basically given me the time to actually read out and check out new coins that I might want to invest in before the next bull run. When the market's climbing very fast or falling very fast, as an investor, we have to make very quick decisions and we hardly have time to actually sit down and dig into the details of many other potential projects. So we're going to try and make the best use of this market downtime and get as many reviews out as we can. So lots of great reviews coming up. Make sure you hit that like and subscribe and follow us to build your own portfolio before the next bull run. I hope you had a great Sunday. Rest well and we will catch you soon.